EMP is on here, to me that's a really good low. And the market, as I've said many times, had the big sell-off earlier in the year. The primary trend has been up. Very rarely do you see, especially coming out of all the earnings now, a market take a big 180, bigger than what we've seen over the last week and a half, 2 weeks, where the market had that decent sell-off, and there was a decent sell-off. And so today is an important day, but I just think all the bulls kind of have to do is not dig too much into the gap. I wouldn't be bearish if they started to want to go back down from here and fill it, but I think as long as they can stay kind of above last week's close into this week, the longer that they could spend some time above it. I don't expect it to be easy. I think the more that it builds up for people to start coming in and buying this market. But one thing I want to point out before I get to trade the open with Jay and Tanya is,
are you trading
Monday
wise?
mornings
Are we imbalanced?
really important I watch
or
opening
rotation?
range,
Is
because
VWAP
Mondays are
open?
notorious for trend days, and so a lot of times Mondays if
are
we open up
notorious
for on a gap up. Just watch that opening range and look to see if it stays above it for a short period of time and it starts to build into like a trend day. If you're looking to short that on a gap up Monday, very difficult. The only way I kind of look at today as a short for short-term day traders is opening range is the high. You use that as your pivot and it starts to drift back into the gap. It's an easy way to manage risk in a day that I think doesn't need to do much. It just needs to consolidate here for the bulls to have a win. So again, we'll see. Farm, as usual, thank you so much. We missed you last night, but great to have you here this morning. Everyone go give Farm a follow. Check out what he's doing. Farm, I will see you later this week.
Take care, Deli.
All right, everybody. Big day here on Monday so far, right? We had Nick, we had Farm. Of course, we had the morning macro crew and Jimmy talking about everything that's going on in the market. And here we are. We've got a new, really dynamic duo here for Mondays. I always talk about Mondays with Tanya. As Tanya comes in, she's cool, she's calm, she's collected, sets the tone. In my morning note, I always talk about small and smart, ease your way into the week. Easy like Sunday morning, as many will say.
Yo. Testing 1 2 1 2 1 2 1 2. Testing 1 2 1 2 1 2 1 2. Testing 1 2 1 2 1 2 1 2. Perfect. Okay,
I completely accept the risk, or I am willing to let go of the trade.
Yep. Let's get it. RL 101. Good. Econ. Events. Nothing. Speculations about US government and of shutdown. Bull sign. Gap up on the day. Bull sign. Quite a gap actually. 400 points. Oh, bull sign. Okay, high time frame. Obviously we closed right here and we shot up. We're currently, what is it? Yeah, let's say 400 points up.
Big sell. NQ plus 1 touch.
That's a bull sign. There was a tiny distribution here, tiny 200 points, so by no means tiny, so we just sliced through it. Perhaps we can Perhaps we can retest some of these spots. Peek into this distribution to find a reoffer. Obviously overnight we have this distribution and this distribution. So if we combine the two, this could be the spot to reoffer right here. What is this? 420s? I mean, not reoffer, rebid. Was the ultimate target being something like that? 800. I mean, that's massive, but it's doable. We have crazy ranges. So, first spot. Obviously weekly, just start of the week, we are in the previous week's value, this box, so we came from below, did not do any testing of the previous value area low, so ultimately the destination could be 900, 400 points away on the weekly. On the monthly, last Friday we peaked below previous week month's value area low, and then we showed up, and now we are at the monthly VWAP. So the monthly VWAP is also a good place to find a good line in the sand, I guess. So I'm just gonna mark it. We could do something like this, maybe to traverse the current month's value, or we can do something like that. So let's see what's gonna happen. Obviously, as we come closer and closer to the open, we're very compressed. So yeah. 420s, 530s, 420s, rebids, 530s, line in the sand, bullish above, bearish below. That's all I got for the high time frame. For intraday, we have no news, we have good R-wall, obviously we have a gap up from last close relative to now. Overall I would say I'm a bull bias today, but let's see how the day shapes up. Anything can happen. Gonna be keeping an eye on that monthly VWAP spot to see how it's gonna behave. And as always, I need to type out my rules. Number 1, 10 minutes break after every trade. Number 2, max DLL -1, 4R.
NQ +1 touch.
Max 3 Ls in a row. What else did I have? I swear I had 4 rules. What was the other rule? I don't remember. Nice rule, by the way. good reminder. Number 4 is wait for pullback. Wait for show of hand. Do not try to catch a knife. Number 5, wait for pullback after the hand is shown. Boom. Alright, let's see what happens. Obviously I did a few changes to my setup since last time. I have cumulative delta that I'm gonna be reading more. I've reduced the size of the footprint chart just for like a quick look and not rely on it all the time, because you lose the forest for the trees. Yeah, I think we're good. The most important thing is 10 minutes break in between. On Friday that was very nice to just step away and reset. Do a little bit of breathing exercise, a little meditation if you will. DLL, then respect DLL, that's it.
I never move my stop loss.
Mute and mute. Okay, that's good. Mute and mute. Ooh. How do I set up next scene? Switch to scene. Theme. Okay, something like that. Okay, this works.
Big buy. NQ, plus
buy.
one touch. Big buy. Trade without fear or overconfidence. Big sell. Big buy. NQ plus 1 touch. Big sell. Big buy. Big buy. Big sell. Big buy. Big buy. Big sell.
Okay, some crazy buying right now.
Big sell. Big buy.
Very aggro buying. Might take a piece. Trying
Big sell.
try and participate in this. This looks very strong. Or
Big buy.
it was strong, now it's not very strong.
Big sell. Big buy. Big sell. NQ plus 1 touch. Big sell. Big buy. Big sell. Big buy.
I don't know. Buyers seem to be pressing a bit, but
Big sell.
there is some resistance for sure.
Big sell.
Hmm.
I never trade around VWAP in a rotational environment.
Way too early. I mean, VWAP seems to be holding. That's a sign of a trend environment, trend move.
Big buy.
Okay. Aggressive buying stepping in.
Big buy. Big sell.
Big buy, big sell.
Big sell. Big buy.
A lot of buying here, but does it equate to the similar move? Should I open it up a little bit?
Big buy.
Wouldn't mind a stronger push, to be honest. There's a lot of absorption, I guess. All this buying did not equate to a strong push, I don't think. 24 points for all of this. Come on, bruh. Or maybe we're not done yet. The selling was pretty weak, at least for now. I'm ready to get out if I see some strong selling. Otherwise, holding for now. The buyers are trying. Buyers are trying.
Big sell.
If we can pump, if we can break this high, sellers might get underwater. Had a big push from the buyers. Let's see if not liking this, to be honest. Yeah, there are definitely signs of absorption here, unless we can break through. Looks like we can. Or this is the last gasp.
Big sell.
Feels like we can do better, to be honest.
Big buy.
But at the same time, I'm not sure. Is it gonna fall apart? All this buying.
Big sell.
It's definitely a bit of a grind that I am wary of.
Big buy.
Okay, some selling coming in. I do want to close, not gonna lie, but let's see. Every time I want to close,
Big buy.
it becomes a generational long. Anything can happen. We did pump up from monthly VWAP.
Big sell.
I'm a bit wary of this stall now. There is some selling coming in. Like especially right here.
Big buy.
Buying continues.
Big sell.
Can I get the last push? It seems we're like a
Bias
lot of
check. Big
wicks
buy.
in the
What is the
top.
current outlook? Are you trading what is? Are we imbalanced / trending or rotational? Is VWAP holding? Big sell.
Let's see. Don't like this.
Big buy.
There seems to be
Big
still
buy.
buying.
Big
Well,
sell.
a lot of strong buying came in. Is this the last
Big sell.
grasp of buying? Before we rotate down, look, PVC is gonna shift to the highs. It's not a good sign, generally speaking. That means somebody is loading in. We're going sideways on the delta. Can I have the last push and I'm out? Or? This looks still quite strong. I gotta lie. A little squeeze and I'm out. Is this it? Is this the squeeze?
Big buy.
Okay, that's the squeeze, I think.
You don't need to know what is going to happen next to make money.
I'm out. That was good. 3R.
Big sell.
Yeah, this looks a bit of a capitulation here from the buyers. But anything can happen. Never mind. Immediately bought back up.
Big buy.
Okay, can take a break, let it move.
NQ plus 1 touch. Big sell. Big sell. Big sell. Big buy. Big sell. I understand the absolute necessity of these principles of consistent success and therefore never violate them. Big buy. NQ, plus one touch.
You show up to the next day, like he'll have these pods or teams or whatnot that people can be a part of, rather than just sitting there alone, as trading has always been a challenge and whatnot. So that's what we have going on: training, backing, all that good stuff. Just loving what we do every day.
Terrific. And actually, you've reminded me. I had somebody on Twitter who he said he's new to trading, and obviously he wants to be highly profitable. Just thought it was quite ironic that he said that, because I thought that kind of becomes
as long as there's the right expectations for that.
Yeah,
yes. Time horizons.
He said, should he try and learn on his own, or should he join a prop firm? And if so, can you recommend any? Well, if he's listening to this, we're already hearing about one here and now.
Sure.
But the rise of the prop firm has they've always been there, but they've taken on a new angle. They're different these days. So maybe you could tell people what the benefits are of joining a prop firm.
Yeah.
What some of the drawbacks may be. I guess, with all these things, a lot of people tell me they apply to many, but they don't get in with some. And then, of course, there's the cost of it. There's a commitment to joining a prop firm.
Yep.
So maybe this is a chance for you to just tell people, what are the ups and downs and the positives and negatives of joining a prop firm.
Yeah, I think, not unlike anything else, whatever this person you're speaking of here, whatever life experiences they have, whatever ways they found success, that very rarely, okay, obviously there's the Mozarts of the world or whatever, but I'm not an expert on them, but you kind of think of them as kind of like isolated people, who just have this genius and this type of stuff. Trading and other performance activities are pretty much not that, okay? So being able to step into a team environment with peers where there's overarching a senior trader who's been there, who has experience, who can foster your development, okay? That's That's someone who can actually look over your shoulder and see a decision that you made, perhaps even in real time, as I do with my traders. I told my traders the other day, I said, in fact, I drew out, this is all remote, right? We're on a Discord server. It's all remote, all over the world. I drew out a seating chart. I said, Kimberly, you sit here. Mike, you sit here. And I told people, really think of it like we're leaning back in our chairs and talking to each other. And by the way, this is all remote, right? We're on a Discord server. It's all remote, all over the world. I drew out a seating chart. I said, Kimberly, you sit here. Mike, you sit here. And I told people, really think of it like we're leaning back in our chairs and talking to each other. And by the way, I will drop by and I will tap you on the shoulder and I will ask, tell me about this position you're in. Why are you doing this? Did you consider that? Is this a good idea? Talk to me about your risk. Talk to me about what's the plan here. So to have that type of development and feedback from someone who has been in your shoes is just huge. You're never going to get that from a book. You're never going to get that from look, I'm someone who has online courses. You're never going to get that from an online course. So that type of development is truly, I think, the biggest benefit to a prop desk. Is there more leverage, right? Maybe you don't have the capital, so you can access capital. We all know, you know as good as any, that one of the biggest inhibitors to success in trading is being undercapitalized.
Big buy.
Right? You think you're just going to fund a $2,500 account and you're going to be good to go and start making six figures within the next year or two. It's very, 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 very unlikely, right? So that's important. The team environment, the capital, also reduced costs.
Big buy.
We have a very low fee structure in terms of what do you have to pay in terms of commissions and access to seats on exchanges and all those type things, because that type of stuff really adds up. If you're paying several dollars a trade, we can get that more in the cents per trade. So that's a big deal as well as keeping costs low and whatnot. So off the top of my head, those are some of the biggest benefits. Starting first and foremost with the environment you're putting yourself in. Being a professional, you want to be highly profitable, they said, right? Well, you're going to have to be a professional.
Plus one touch.
You're not going to be able to weekend warrior your way to that.
What you said there was fantastic. And it really struck me on this point about the learning environment. Sure. That is huge. It's like going to college and getting a full-blown education.
Or worse.
Or worse. But you get mentoring as well. You get... I often tell people what's the greatest edge you can have in trading, and it's mentoring. It's not knowing where the market's going. It's not having some super system. It's not having lots of money to start with or capital. It is mentoring. And when I see traders who have come through and made a success of it, often they've had some great mentors early in their life.
Yeah, there's not been I don't know a successful trader who can't point towards that, and so that I think speaks volumes towards that. Not to get on the kick. I think it's been well discussed a lot, but I'm really into chess, and I have a chess coach. He's way better than me. He can show me mistakes I make. He can help me in terms of a training plan. And the same goes for, I'm into golf. I have all kind. I'm constantly videoing my swing. I bring a tripod to the driving range. I have a coach who reviews that video with me and provides me drills and things to make corrections along the way and whatnot. To me, it's common sense. But quite frankly, the trading community is a little bit backwards and because of all the guys with stacks of money in front of Lamborghinis, there's this culture of around you can't learn anything from a coach or mentor or any of these kind of things, and it's the most utter garbage I've ever heard in my life. It's really ridiculous. And name one other field where that is the predominant culture. I've only ever seen it in trading. Learning from those who've been before you, who
I never
can
dollar
help
cost average.
guide you and show you the ropes and help you learn more about yourself, help you refine a methodology, help you tighten up risk, help you see things the way you wouldn't have seen before. It's all invaluable stuff, and you don't get that on your own in isolation.
You're fighting a kind of, let's say, a culture of get rich quick.
Sure.
And you've got a enormous array of people selling something out there.
Right. Predatory.
Yeah, brokers want, they need, for want of a better word, they need cannon fodder. They need, their models are based on getting lots of people in, lots of business going through their books. They don't really care whether you're good enough or not. They just want you coming in. And I'm not talking about professional brokers, and I apologise to anyone who thinks I may be. I know there's some great brokers out there, and I've worked with them. Of course. But there's a lot of dodgy brokers out there. There's a lot of dodgy trainers selling training courses. There's a lot of people selling systems that are unproven. They're training, they're selling those systems, and they need business as quickly as possible. They need to print tickets for their sales, and they will tell no one's going to say that this is really hard. You need to take years to learn before you're going to become any good, because you're just not going to sign up. A lot of people, they want you in now.
I think there's a lot of at least in the community that I've built and of other, let's say, trading educators out there who are very well respected, there's a lot of smart people out there, right? It's not all cannon fodder or whatnot. There's people who see through that, and those are the type of people that myself and other really reputable people attract in their doors to simply help and hope that they can take them to that level they want to be at.
But that's why we talk about these things on the Alpha Man podcast. Myself and Mark, when we originally met, there was something, slightly altruistic about our conversation. That there's a lot of young people out there, a lot of very smart people, a lot of very good people, but they're being sold a lot of bad material and bad education.
Reminds me of our tryout process, right? So we have an open tryout where anyone in the world can pay us, because it takes money to run it and administer it and all this stuff, to try out to earn a seat on our desk. That is the only way onto our desk. And for me, it's altruistic. It's where I came from. Not a wealthy family, middle of nowhere, blah, blah, blah. No uncles who did it, no parents who were financially, savvy, none of that stuff. And I have found amazing people out there in Eastern Europe, Canada, Latin America, Asia, all over the place, who just have that drive, and that's an opportunity for them that I feel that I am offering to the world, that anyone, no matter what's on your resume, no matter where you went to school, no matter who you know, it's black and white, you can make it in, just show us, right? But there's so many others out there who run that as a pure business model, who are essentially feeding off that get-rich-quick hopes and dreams of people out there. So anyways, I don't know if this conversation is the most helpful for your listeners or whatnot, but...
It does sound slightly negative, but I think we're trying to just, I guess, putting a dose of realism, because you are trying to... you've got this prop firm going. Yep. You worked at a great prop firm before.
Every day, traders and investors...
Each market with each of those 9 charts or so up, and I will just go through them, and I will pretty methodically go through this top-down approach. So my approach, I call it the NADRO methodology, N-A-D-R-O, and it's an acronym, and it's very much a hierarchy of importance too. The N is for narrative, the A is for acceptance, D is for developing value, R is for rhythm, and O is for order flow. So the main thing I'm doing when I come in the morning and I start going through each of these markets is I'm focusing on that N, that narrative. And I'm not talking about a
narrative that you often hear from like a fundamental perspective. What's the narrative in this market? That type thing. I see markets as an auction process, and I see markets every single day. I can't always identify a clear narrative, and that's one thing that students and traders on the desk I try and really help with, because people think that they should always be able to come up with a clear narrative in a market. And the fact that you can't come up with a clear narrative in a market is just as good of news for you, and is meaningful of news, maybe not as good, but meaningful of news as when you can, because that means there's not a bunch of edge there. There's not something for you to really lean on and for you to attach to. So when I talk about narrative, I'm talking about seeing a story that's unfolding in a market where there's been what we call a key recent rejection from a place where the context of that market would change. Let's say between two states, between a trending market to a range-bound market. And if you've got a fresh conditional shift there, and you're near that line in the sand, as we call it, and the market's showing you, based on what we kind of have a view of, what, as long as this condition shift can hold, and who knows if it will or not, right? That's not our job as traders. But I identify what is occurring, and I can have some expectations for if what is occurring continues, here's where the market could easily end up. And so we call those likely destinations. So you see, I'm painting this picture of where we've been, where some key shifts in like where price is rejected from or accepted into structurally, and where it could end up. And so that paints a risk-reward landscape. That shows me where the idea is wrong, and if it continues to hold, where we could go. So I'm looking at each one of the markets, and I'm trying to decipher and speak the language of markets and determine what that narrative is. And from there, I think it's pretty obvious, I narrow it down into, here's where I have the most clear identification of a good narrative, fresh thing that's unfolding in a market. And that's where my focus will be as the opening bells start to ring.
Do you change your technical strategy for each individual market, or is it the same exact technical strategy for each market?
It's the same exact top-down approach. It's, figuring out what the market's up to and higher time frame and risk reward and that type stuff. It's really the tactics on the lower time frame. Now you want to go trade it. Now you want to go access it. How are you going to approach it? And very, very importantly, the order flow. Order flow across markets is extremely different, and you can't just, for example, I think most people know I'm very heavy on cumulative delta, and the way delta would behave in various markets, the S&P to crude to gold to the euro, is extremely different. And so you can't just use those order flow tools the same way. And that's part of why I was for so long almost exclusively focused on crude oil, is because I felt it was, and I still do, I don't think that anything about my path was ever, well, I've done a lot wrong. Don't let me say I haven't done stuff wrong, but my path of specializing in crude was not wrong, even though I'm not doing that right now. I think for me to go trade any of these markets, whether it's crude or the Bund, having that more intimate understanding of its order flow characteristics and the way it moves on a short-term basis where I end up operating in is extremely important. And so that's the main differences. But the top-down approach, deciphering the narrative, seeing where the risk-reward landscape is and whether there's good opportunity or not, that is exactly the same.
Hey everybody, a quick pause here to talk about FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-mini Russell 2000 Index Futures Contract, symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com.
NQ. Plus
I
one
would say
touch.
for me, the most difficult thing when I've tried to go and trade other markets was developing that relationship with those markets. I specifically trade support and resistance levels, and I look at the reaction at those levels. And even though I trade the S&P,
I predefine the risk
I find it
of
very
every
difficult
trade.
to trade the Nasdaq. You know, I feel like they're just so different.
Quippy,
you know,
thin.
Yeah,
you've got to end up using that thinness of that market and the way it blows through levels and wicks them. You got to end up using that from something that like shakes you. And I know you know all this, but I'm just kind of giving some general advice for listeners. You got to use that to your advantage. Now you've got to wait for that liquidity blowout and capitulation and wiki clear through, and then start to, versus the S&P or bonds. My goodness, you're working those orders as close as you can to those levels, and they should hold pretty good for you.
Yeah, people always ask me, why do I choose to trade the S&P and 10-year? And the reason I like those markets over other markets, and why they, to this day, remain my primary markets, is because price matters the most to me in those markets. When I see it hold a price and come off of a price, that reaction to me means something. Versus in the Nasdaq,
in the Nasdaq,
or maybe there in several other markets, I'll look at it, and that same style that I have gotten accustomed to trading, when I go to these other markets, I've really struggled. I mean, gold has never been my friend. Gold has been a very difficult market for me because I'll see a reaction that I've seen very similar in the S&P, and I see that in gold, and I'm like, wow, this is a great place. And all of a sudden, I'm like, wow, it's just, it's the exact opposite of what I thought would happen based upon that reaction happened. So I guess what I want to ask you is, how have you been able to develop relationships? Like, what has been your process aside from the strategy, right? I mean, you said you kept the strategy pretty much the same, but developing that relationship with each of these new markets that you're adding.
That's a fantastic question. You should start a podcast or something. There's a twofold thing. On one hand, there is no free lunch, and there's just simply no shortcut to, for example, the I guess decade now of relationship building that I've done with crude oil. There's no shortcut to me going and earning that in gold now, right? So on one hand, there is a trade-off to the style box, style drift that I've had as a trader. There's a trade-off to that, and that is I'll be participating in soybeans, and that's not going to be a market that I would say I have that intimate relationship with like I do with crude. And so on one hand, it's simply not going to be there to the level that it was, and that's going to reduce performance, if you will, by a certain amount. But remember, the reason for the overall shift was to buoy performance, to boost performance by being in better markets with better opportunities. So I always say most decisions you make in trading are trade-offs, right? Like, you can make a decision to get bigger risk reward in your trading and what your trading business, what you're doing. You can make a decision, and you can make that happen. I think some people don't realize that they can do that, but you can make it happen. What's going to be the trade-off, though? What's going to be the equal but opposite effect? You're probably going to lower your win percent if you make an adjustment to your trading that boosts risk reward. So anyways, going down a little rabbit hole there. But so that's the one side of things. On the other side, the more, I guess, productive conversation is it's almost like I was a new trader again. And so I'm doing the things that I recommend that other traders do, which is put in the work outside of clicking the buttons of buying and selling. And so for me, that's doing a whole lot of scrolling through historical data and just visually backtesting, if you will. Because that's how I used to print out charts, I'm not old, but I'm getting old. So I used to print out charts and go through. I'd use another piece of paper and I'd cover them and only show one bar at a time. And so that's how I'm used to getting to know a market. And so obviously I do that visually. And then, one of the most fantastic tools for new traders, and obviously the conversation we're having here, veteran traders alike, is market replay. So, I'm going back and I will get more reps, right? I'm trying to catch up on those 10 years that I've got in crude oil. I'm trying to get more reps. And the cool thing about technology and all this stuff at our fingertips is you can get those reps. So I'll do a lot of market replay and go back and see how markets move and how they react and to various setups that I might have, and just do the hard work of getting that understanding, man.
I love that answer. How has your overall performance changed since you've added all of these markets?
It has reduced amplitude of drawdowns so far, right? I mean, it's not even been a full year of kind of this evolution, but I think I would get stuck in some areas where crude, got a little dull or just wasn't conducive to my particular strategy, and there would be some drawdown. So it's almost like I've added a portfolio, if you will, which brings a bit of diversification. So that's kind of how I feel about it.
I guess the sense I'm getting is that it's keeping you out of bad trades. It's keeping you out of days to where you looked at, let's just go back to crude oil, where you looked at it and said, really nothing setting up here of my liking, but
maybe I'll scalp 10 cents here and
exactly.
Go for that in the middle of yesterday's range and value it. Yeah, exactly.
NQ, plus one touch.
So you working with a prop, how did the firm look at you from being a successful trader trading one market to then embracing you and supporting you to be going and trading all of these different markets?
Well, it was easy for them to embrace it because it's actually more along the lines of the general S&B culture and the way they approach things as an equities, primarily equities desk. What do? They trade stocks in play, right? They go look for what's moving. And yes, they'll trade more names per day than I am. So I'm not doing that. That really didn't work for me, trying to, run around and chase news catalysts and, oh my gosh, this is breaking news here. Let's go look at it. Let's go trade it. Oh, it's a ticker. I don't even know what the company's name is, So it's an easy shift. In fact, Bella has, at various times encouraged me to look into it. And so it's easy. It was easy support.
I want to go back to the conversation that you and I had when we were riding in the cart at the Traders Invitational, and we were both talking about how, both of us have changed over the years. I have become a trader who's trading less frequently nowadays. I feel that suits me better. And you're someone who said, you know what, Anthony, I've gone the exact opposite way. I'm actually trading more frequently. I'm becoming more and more of a scalper. Talk to us about that.
That was mostly around the current conditions, right? So if you're listening to this recording 5 years ago, you may not know, but we are going through a ridiculously, 2000, 2008 type of period right now. It's, March of 2020, and things are pretty wild. So for me, over the past several weeks, adjustment that I have made has been being shorter term, because the rotations are so fast and so furious that the opportunities are just simply there for those moves. If you're going to try and swing trade this environment, there's a lot of back and forth. Things aren't just moving in straight lines. So there's just I feel like the opportunity cost of sitting in a position while, hey, you might be able to buy the low of S&P and hold it for another 6 months here and just make a career out of that trade. Maybe you could do that, but for me, the opportunity cost of sitting in a position, because there's so much intraday rotations, and I'm not just talking about your normal choppy S&P rotations. I'm talking about clean moves, tradable moves, where you can get 3, 4, 5 R on just scalp rotations. I'm not talking about 1-to-1 scalps here, right? It's just shorter term than I'm typically used to. I've always considered myself more of a intraday position trader, where I like to, again, based on that deep understanding I have of markets and the narrative that I can identify that they're up to, I know where the best trade locations are. Doesn't mean I always profit from it. Doesn't mean I don't get chopped up or stopped out, or far from it. That stuff happens to everybody. But it does mean I have a really good read on at times what markets are up to, and I know where, quite frankly, the high of day or low of day is a decent probability of being put in. So I get in at really good trade locations, and I want to maximize that, and I want to hold those trades as long as all the intraday tools I'm using are telling me that, keep holding. This is supportive for my process. Currently, with the wild swings and rotations, there's just so much opportunity there that I'm not really approaching the day-to-day as where can I get in from a really good extreme for the session and then hold it maybe until the close, or hold it until a very, very, long trend, develops, or a full mean reversion across a balance area develops. There's 5 or 6 or 7 or 8 or 10 more opportunities between point A and point B there. So I'm looking to capitalize on them.
Well, I completely agree with you on that, because even for myself, who's someone who spent 15 years out of my 21 career being a scalper, when you get into these types of markets, I revert back to being more active, because really price is getting me out. You're getting these moves that are so big and so fast that I don't care what your time frame is. If you're getting near your targets, you're getting out because price and the action is telling you to. But in general, I'm curious, for you as a trader, over time, have you, let's take out this cycle right now that we're seeing in the markets, do you feel that you have been increasing the amount of trades that you're taking per day, or decreasing?
The better I get at trading, the less I trade and the longer I hold, for me.
Yep.
But that's because my personal weaknesses and why I lost money for so long and thought I made the turn and came back and didn't and sucked it up. There's a lot of reasons, but if you look at a day where I really just performed horribly, it's typically an over trading session. It's typically a day with way too many executions, not fully accepting the risk of what might have been a good idea, and I chop myself up even though my original stop never would have been hit. Too active, too thinking I always know what's going to happen next in the next few bars, and making too many decisions there. So for me, over time, and that includes up until the past couple of weeks, it is more of a gravitation towards that, doing a good job of being an intraday position trader, waiting for more ideal opportunities, and not messing it up once you get in those as often.
Same here. And we used to call that on the floor a personal fast market. You just watch a guy trading himself in a circle. You're just sitting there going, like, take it easy, man. Like, where are you going? He's buying the offer, selling the bid, thinking that these moves are going to be happening. And I don't know about you, but for me, in slow markets is when that will tend to happen to me. All of a sudden, I get in this over trading.
My worst days are days where you might as well have played golf rather than trading.
Yeah, exactly.
Really?
And we were actually talking about this at the dinner table, and how when the markets are really busy, we're all just so much more focused, and I make less mistakes as a trader when it's busy. I'm trained to just turn and burn out of things. When things aren't going my way, it's like I recognize it and I'm quick to react. When things are slower, in slower markets, are when I find myself, doing the old bad habits.
And for me, the main bad habit is exactly what you're saying. And when it is that slower market, ultimately, I think what happens to me and what happens to a lot of people is you end up forcing some expectations in the market.
Yes.
Rather than sitting back and allowing it to come to you. Because most traders, it doesn't matter if you're really mean reversion or if you're really more momentum, based, or in one sense or another, I think we're all momentum traders, right? Whether or not you're fading a move, well, now you're looking for momentum the other way. You know what I mean? Like, we need price to move. So when price is continually not giving that, and we continue to demand that it does, is typically the problem.
Hey everybody, I want to take a quick pause and talk about RJO Futures. They are a long-standing brokerage firm with personal broker relationship. What is your mindset like in recovering from a big drawdown?
Oof, great question, man. This is, I guess, what's more important that we could talk about today, kind of, right? Because this is ultimately what separates, the boys from the men, so to speak, in I guess, to use a sexist trading term. The first thing that I've learned to do, which is totally counterintuitive for me, against my nature, is to stop trying so damn hard. Okay, so typically, 100% of the time, if I'm not seeing things well and I'm slipping into a drawdown, and most traders are in a drawdown most of the time, right? Your last trade was a loss, you're in a drawdown, So what I'm talking about is something that's a little bit removed from your normal variance of P&L, and you're actually getting into a real drawdown. I used to try harder, right? I used to... Essentially what drove me was the recency bias of the recent losses. And hey, look, quite frankly, I'm more of a blue collar guy. I'm from Alabama, grew up on a dirt road, and I'm going to outwork you, right? I'm going to come in and I'm going to try hard, and I'm going to never say die. And I have extremely high, almost like cocky kind of self-confidence. So that's another bad thing for trading. And obviously that's not a good recipe. So step one for me is to have painfully learned to don't try harder, don't press more to fix the situation. It is what it is. Now's the time to actually take the foot off the accelerator rather than push it pedal to the metal and try and improve. So that was a long, hard lesson that I had to learn. And secondly, is along the same vein there, is getting back to the basics. And I think this is true in sports. It's certainly a lesson that I took from being a competitive tennis player growing up. When you're not playing well, when it seems like nothing's going your way, it's time to get back to the basics. It's time to stop thinking about the advanced strategy and perhaps various tactics that you're trying to or had planned to deploy in that match. And it's time to get back to watching the way the ball, I kid you not, watch the way it spins as it bounces off the ground, as it's coming to you. Focus on the way it's rotating to make your shot. Focus on having a good, in tennis, you take the racket back and then you swing through. Focus on having a good takeaway. Focus on having great footwork. Focus on a nice follow-through finish on your shots. Focus on a safe cross-court forehand with nice net clearance and trying to get some good depth on your shots. Go back to the fundamentals, the basics of good tennis, rather than, again, trying harder and focusing on more, let me hit it harder, let me hit more winners, let me try and win this thing, because, it's not working. So in trading, what do those things look like, right? What are the basics? Really making sure that you have a good narrative present, that the trade that you're thinking about getting into is backed up by some hypos or if-then scenarios or whatever you call it, that you're prepared to go execute on that day. Make sure that you're not being impulsive when you are making a trade decision, whether that's entry, whether that's moving a stop, whether that's taking some off, whether that's adding. make sure that you're getting back to being very checklist driven, very process driven in your approach. And I think trading less becomes a part of that. So you're amping up your selectivity.
I continually
right?
monitor
I think
my
there's a normal ebb and
susceptibility for
flow
making
with a lot of
errors.
traders. With you're doing well, you feel like you can trade more and do more. You trade worse. Now's the time to get a bit more selective. I'm not talking about being afraid to get in because you're afraid of losing anymore, but I'm talking about making sure that if you're putting risk on, it's well worth that risk. It's A+ type opportunities. So slowing down, backing off, getting back to the basics, the fundamentals of good trading for my process. Not trying to, get cute here and there, which I allow myself to do at times when I'm trading well. So, I mean, that's the most important things, I think. From there, reducing size, right? And as it was for me, one of the, I guess, step 4 might be going back to the demo for a second. If you're and you've got to know yourself here, and having access to guys like Dr. Steenbarger and coaches and having a risk manager and stuff helps. It's very difficult to do this on your own. But knowing when it's time to say, you know what, just let me go to the demo. Let me just start to build some form of psychological capital. And one thing, and I'm a very process-driven guy. I like to talk about as much as I can, be objective and black and white, tangible stuff. But let me give you one more, little more subjective type thing here, and just from a mentality perspective. This sounds crazy, and this sounds contradictory to a lot of stuff that you'll hear me say. But I think there's something to this. And in fact, I remember a year ago, one of our very best traders just
Okay, fuck this, I'm not gonna trade anymore. Definitely poor high, I would say. Is this a poor high? Not yet, but soon. What I see is this. We have this. Someone is sitting and passively selling here. We have up leg, down leg, short selling. I mean, poor, weak selling. We have up leg that goes up to here. And we have a lot of way more buying. Then we sold off on some poor buying. We pumped up again, and now we're drifting a bit lower. So I would like to see a stop run and then reverse, and maybe it reverse value, but just purely because we have 4,000 delta, but it's refusing to sell off, so there's no sellers. Well, there's a passive seller, but there's no follow through because of this. We're not pushing compared to this from 1,400 to 4,000 delta. We're not pushing higher. Does that mean we're not going to go higher? No. But it's not looking good for buyers unless they take out this high and continue pushing up. But at the same time, today is not rotational so far. From the start we pushed up and we've been on a channel between +1 and +2. VWAP is holding. That's a sign of a trending environment. We push to +2, back to VWAP, rebid, push to 1.5, I guess. And now we have a lower high and we're going down. So is this for sellers to start pressing? I would hope so, because otherwise if we continue pumping, we're gonna pump hard, I think. But now there's not a lot of buying coming in. You see here we made this high, we made this high, I think, and then we sold off, created this high, but the amount of buying here is way less. Now we're drifting lower. So unless buyers rebid VWAP again, we might sell off here. We went from 4,000 a minute ago to 3.8k. Let's see. In any case, I'll keep an eye on what's happening, but I will not trade. I had a 3-hour trade right here. Was not really happy with my entry, but VWAP held. I thought I'm gonna get stopped. VWAP held, and yeah, and it was a pretty good exit as well. That's it. Well, this is a deep move down, but also the selling is not very strong. There's no single bam down bar. So this is also not very convincing. This high needs to be cleaned up, I would say. In any case, that's all I got for you today. Bye bye.